Hello everyone. Welcome to the Stock Minds web channel. Investors searching for stocks that combine both growth potential and reasonable valuation might find ADMA Biologics, Nasdaq ADMA, an interesting candidate. In its Q2 2025 results, the company delivered solid year-over-year revenue and earnings growth, displayed strong profitability metrics, and affirmed its forward guidance. While there are challenges especially around valuation multiples and some near-term expectations, the overall picture suggests that ADMA Biologics may offer a good balance of growth and value for long-term investors willing to accept biotech risk. In this video, we will dive into ADMA Biologics' recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About ADMA Biologics. ADMA Biologics was founded in 2004 and is headquartered in Ramsey, New Jersey. It is a biopharmaceutical company focused on plasma-derived therapies, especially immunoglobulins, which are used to treat individuals with immune deficiencies and infectious disease risks. It develops, manufactures, and commercializes specialty biologics with key products including Asiniv, a hyperimmune globulin with broader antibody spectrum, and Bivigam. Its operations include plasma collection, biologics manufacturing, and commercialization of immune globulin products. ADMA Biologics financial performance. ADMA Biologics reported strong second quarter 2025 results that underscore its improving fundamentals. Revenue for the quarter reached $121.98 million, a 13.8% increase from $107.19 million in the same period of 2024, while quarterly earnings per share, EPS, rose 7.69% to 14 cents from 13 cents a year earlier. On a trailing 12-month TTM basis, revenue climbed to $474.17 million, up 43.58% from $330.24 million, and TTM EPS surged 469.09% to 85 cents from 15 cents, highlighting significant profitability gains. Free cash flow per share, TTM, edged down 6.9% to 27 cents from 29 cents. Profitability remained robust, with a gross profit margin of 53%, net profit margin of 44.06%, and free cash flow margin of 13.87%. Returns are equally impressive with return on assets of 20.81% and return on equity of 71.23%, supported by a conservative debt-to-equity ratio of 0.21. Over the past 5 years, ADMA Biologics has grown revenue at a 71.2% CAGR, turned net income positive in 2024, and already has a high profit margin, while free cash flow has also turned positive. ADMA Biologics has transitioned into a profitable company, and the growth story is not over yet. ADMA Biologics Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast 2025 revenue of $506.3 million, representing an 18.72% increase over 2024's $426.45 million, though EPS is expected to ease 29.94% to 57 cents from 81 cents. Even so, Wall Street analyst maintains a strong buy rating with an average price target of $29.06, an implied 79.83% potential upside from current levels and the highest target price of $35, suggesting potential upside of 116.59%. ADMA's stock price performance and valuation. At the time this video was created, the stock was trading around $16.16 per share, reflecting a 16.3% decline over the past year, a clear underperformance compared with the S&P 500's 17.9% gain during the same period. However, its long-term track record remains impressive, with the share price soaring 579% over the past 5 years, far outpacing the S&P 500's 100.2% rise. From a valuation perspective, the company carries a price-to-sales (PS) ratio of 7.77 on a trailing 12-month basis and a forward PS of 7.33, alongside a price-to-earnings (PE) ratio (TTM) of 18.41 and 27.42 forward, while its price to free cash flow, PFCF, stands at 58.09. Based on Fiscal.ai data, if we look at the valuation since 2024, the forward PS, forward PE, and PFCF are all below the average. Although these multiples may seem elevated at first glance, they remain reasonable given ADMA's rapid revenue and earnings growth, exceptional profitability metrics, and strong balance sheet. ADMA Biologics growth potential. ADMA Biologics' growth prospect remains robust, driven by several factors. 1. FDA-approved yield enhancement technology. ADMA Biologics secured FDA approval in April 2025 for its innovative yield enhancement production process, a first for a U.S. producer of plasma-derived products. This groundbreaking technology boosts production yields by approximately 20% from the same starting plasma volume, enhancing manufacturing efficiency without needing additional plasma sourcing. Commercial implementation began in Q2 2025, with initial batches confirming the expected increase in finished immunoglobulin output, benefiting key products Asceniv and Bivigam. This improvement addresses a critical supply constraint in plasma therapies, since human plasma cannot be synthetically produced. By maximizing therapeutic output, ADMA gains a durable competitive edge in operational leverage, which is expected to accelerate revenue and earnings growth starting late 2025 and strengthening further into 2026 and beyond. 2. Asceniv market dominance and expansion opportunities. ADMA Biologics' flagship product, Asceniv, targeting respiratory syncytial virus, RSV, showed remarkable market traction with record demand in Q2 2025. Asceniv now accounts for over half of ADMA's total revenue, driven by its unique plasma donor screening and plasma pooling design that create high barriers for competitors. Clinical data from a year-long study demonstrated outstanding outcomes, with no RSV-related hospitalizations among patients treated with Asceniv. The company plans to file for pediatric label expansion in mid-2025, enabling use in patients 2 years and older, which will broaden the addressable market significantly. Additional growth opportunities exist in expanding Asceniv's indications for various patient groups beyond adults and adolescents with primary immunodeficiency. Strong payer acceptance and high patient retention rates further support Asceniv's leadership position and sustainable growth potential in the immunoglobulin market. 3. Robust financial guidance and long-term revenue targets. ADMA Biologics has steadily raised its financial guidance in 2025, reflecting management's confidence in strong growth momentum. For 2025, total revenue is expected to exceed $500 million, with adjusted net income above $175 million. The outlook for 2026 is even more ambitious, targeting revenue of $625 million or more and adjusted net income of at least $245 million. Long-term, ADMA aims for annual revenues exceeding $1.1 billion before 2030, up from a prior $1 billion target. This expansion is supported by anticipated margin improvement driven by Asceniv's rising revenue contribution and operational efficiencies from the FDA-approved yield enhancement process. Adjusted EBITDA guidance also shows strong scaling, with a forecast above $235 million in 2025 and $340 million or more in 2026. These targets mark ADMA's transformation into a highly profitable, cash-generating business with significant operating leverage. Risks to consider. While ADMA Biologics looks like a compelling investment story, we should be mindful of potential risks. 1. Regulatory and compliance risk. The company operates under strict FDA regulatory frameworks and must comply with federal, state, and local laws such as the Federal Food, Drug, and Cosmetic Act and others related to fraud, abuse, and healthcare program participation. Violations could lead to severe penalties, fines, exclusion from government programs, or lawsuits. Approval for additional indications beyond its current FDA approval for Asceniv requires successful additional clinical trials and regulatory review, which is uncertain. 2. Clinical and product development risks. ADMA Biologics' ability to grow depends on successful clinical trials and regulatory approvals for current and future product candidates. Failure in obtaining FDA approval or meeting regulatory requirements around clinical testing could severely impact future revenue streams and product expansions. 3. Product safety and supply risks. As a plasma-derived immunoglobulin therapeutic, there's inherent risk related to the transmission of infectious agents through blood-derived products. The company must maintain strict controls over supply and production processes for products like Acinov, and adverse reactions or safety concerns could impact usage and market acceptance. Conclusion: ADMA Biologics combines strong growth, solid profitability, and a healthy balance sheet, making it an appealing long-term investment despite recent stock volatility. Robust revenue and earnings expansion, high margins, and impressive returns on equity and assets demonstrate operational strength, while analyst forecasts point to continued top-line growth. Although valuation multiples are elevated and near-term EPS may soften, the company's expanding market, scalable manufacturing, and strong analyst price targets suggest considerable upside potential, offering investors a compelling opportunity to buy a proven biotech leader. But remember, this is not a financial advice. What do you think about ADMA Biologics? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.